Sri, what about inflation? Are you convinced that we're going to see inflation start coming through?
Neera, no, I don't think so. Despite what we saw with wages in January and what we saw with the recent inflation numbers, I still don't see a pickup in inflation. And here are the reasons. Even though average hourly earnings increased by 2.9% year on year, average earnings during the week and during the month of January were actually lower in January than they were in December, and that is disinflationary. Second, you saw that in the inflation numbers, the market got spooked about the 0.3% month-on-month that they saw on core CPI inflation rate in January, but up from 0.2%. But if you saw what happened a year ago from December 2016 to January 2017, it was the same increase from 0.2 to 0.3. By March of 2017, we were down to minus 0.1%. The problem is seeing single month in isolation. If you look at 3 or 4 months together, you see that inflation does not pick up.
Yeah. Let me take you to a chart, Sri. #BTV6394. Very simple. 10-year Treasury yield could be making a new range. It sounds to me as if you don't think the risk to higher yields comes from inflation. Where does it come from then?
The risk in terms of the bond yield, I think, does not come from inflation, Neera. You're absolutely right. That is my view. It comes, though, from government policy. We saw U.S. Treasury Secretary Steve Mnuchin talk down the dollar when he was in Davos on January 24th. That hurts the bond yield. That hurts the whole thing, and we haven't recovered from that situation yet. We still don't have a global trade treaty. The NAFTA is hanging by a thread as to whether it will go on or not. And if NAFTA is actually cancelled, as some U.S. negotiators have suggested, it's going to be further negative for U.S. bond yields.